Now more wealth managers say they're putting money into blue chips. Should you be doing the same? Favoring large caps, David Katz, Matrix Asset Advisors. Small caps, Eric Marshall, Director of Research, Portfolio Manager with Hodges Capital Management. I'm going to start with Eric and challenge you, Eric. I don't believe you'll find a period in history where small caps outperformed large caps for this long, which kind of means or suggests we should take the money and run.
Well, at the Hodges funds, we wouldn't argue that there are a lot of attractive blue chip companies out there that are probably due for their day in the sun. However, we would advise investors to think twice before abandoning small cap stocks, because small caps really represent the biggest opportunity for individual stock selection in an actively managed portfolio. And secondly, we would also mention that it's easier for smaller companies to grow in a challenging economic environment like the one that we've just been through. And then also all the M&A activity out there that started really in the second half of 2010. We expect to continue in 2011 due to all the cash piled up on corporate balance sheets, as well as the private equity buyers coming back. We think that'll really help sustain PE multiples for a lot of small cap companies.
David, Eric makes a pretty good case.
I was going to say, we agree with a lot of those points and they make sense. However, the overwhelming factor is market history is very powerful, valuations are very powerful. If you take the last 70 or 80 years, this is the longest period where small has outperformed large. More importantly, right now, small caps are selling at a 17 or 18% premium to large caps. This is the most extended valuation that they have in the last 40 years. So we think, although there are a lot of reasons that make sense about why small is good, large cap stocks are now the cheapest relative to small that they have been in a very long time. They're due for the day in the sun. You're able to get some great businesses selling at 10, 11, 12 times earnings. Usually when you're able to do that, you do quite well in stocks. We don't know about the very near term, but we think the next major move in small versus large is going to be toward large stocks outperforming.
Eric, what about that valuation issue?
Well, like I said, I think that 2011 is going to be a year where you're really going to have to focus on individual stock selection. Yeah. And we can still find values out there in the market. There's still plenty of small cap companies that have really dynamic growth components to them that are not fully reflected in their price earnings multiples. Plus, there's still plenty of cyclical small caps out there that should benefit from the recovery that's ongoing.
All right, gentlemen, thank you very much.
Thank you.
All right, now let's make sure the West Coast is up and out of bed. They hate when we